All right, guys. So now we're gonna talk about forex charts, as well as charting in general. If you're completely new to this, you're gonna definitely learn a lot right now about candlesticks. So really quick, guys, forex trading is just chart trading, right? Get very familiar with this, because if you're gonna be doing trading forex, you have to get just very familiar with reading the charts and the candlesticks, right? So the thing about forex charts is that there's never any sort of thinly traded, right? It's never thinly traded. There's really never a lack of volume. There's never no gaps. There's none of that crazy stuff, halts or anything like that. It's a never-ending chart, right? Which means everything's always connected, always connected. It's never ending. There's always some sort of movement. It's never thinly traded. It keeps going and going and going, right? It's never ending. The only time it stops is when obviously the market closes. But this is a forex chart for you. This is actually a trade that we did take in the past, right? That we hit multiple resistance areas right here, and we finally watched this, right? We finally watched this for the break out of that resistance for a nice, beautiful push up. We had our area of stop loss. We had our SL for stop loss, and she never even came back down, broke above our moving average, and then rolled up really, really nice. So this gives you a visual idea of what a forex chart looks like. Now, I would love to show you guys what a stock chart looks like and show you the difference, right? So let's go to show you what a stock chart looks like. This is a stock chart on a stock ticker called SCPS. Which, by the way, at this time, so at the point of this, at the time of this screenshot, I think it had like a high of like 1913 or 1912. That was a high, 1912. But if we actually go look at the stock right now, just SCPS, I want to show you guys the difference how these stocks, right, they go back to nothing. Yeah, so see, this thing's now trading at 147. If we go back here, we look at this back from a month out. Yeah, you can see back here last December. Actually, it was right here. May of 20. Actually, let's go back to weekly chart. Let's go weekly chart. So you can see that basically it was at 912 back on May 24th, 2021, and right now it's almost 1 year later, and how far she's came down. So basically, anyone that's basically bag holding right here is basically losing all their money. My point is that you can see the difference from a stock chart, right? A stock chart to a forex chart. And this during this day, this was a 5-minute forex chart, but you could see how this is all thinly traded, and then it gaps, and then it gaps, and then it gaps. And all these gaps here means it was getting halted, which means that when it gets halted, you basically can't trade it, and then eventually it comes down, it comes all the way down, and then it becomes more thinly traded, the volume starts to die off, right? So when you trade Forex, guys, when you trade Forex, you never have to worry about the volume because the volume is there every single day. This goes back to what I was saying, how there's $5 trillion being traded per day, right? So there's no point to pay attention to the volume because the volume's already there. Unlike the stock market, you need volume, right? So I've often told people if you're going to trade the stock market, you need to be a hunter of volatility, volume. You need to be a hunter of all that. With the forex market, we don't. We don't need to pay attention to any of this down here. We just focus on the chart. And the chart, guys, will never ever look like shit. It's never going to look like that. It will always look never basically ending. Always like this. And I'll show you guys exactly what I mean. So here's my trading view, and let's go look at some of these forex charts. Look at this. Beautiful. Continue action. Continue action, continue action, continue action, continue action. There's always going to be, let me zoom out here. Let me actually this is, I'm looking at the wrong thing here. I'm looking at the weekly chart. So 15-minute chart, look at this. These are just clean charts. Very, very clean charts. My point is that you never have to worry about any of these being thinly traded, right? Thinly traded. There's so many moves right here. Look at this. This right here could have easily been a move, right? For the sell. Look at that. Easily. We're going to get more into charts, guys. Look at that. Easily sell. Made some serious money. Okay, so let's keep going, right? Let's keep going with this. So next thing is going to be candlesticks, right? This is very important for you guys to know this if you don't already know this. If you know, so candlesticks is how we read charts day in and day out. So why do we need to know this, right? If you want to be a day trader, you need to learn how to read candlesticks. It's just not about making money the candlesticks, guys, candlesticks in charting is a true science, right? As day traders, I often tell people we are engineers of the market, right? We are engineers of the chart, the candlesticks, okay? So over time, you will learn how to read candlesticks better, better, and better. So don't be so hard on yourself if it's hard for you in the beginning, but as time goes on, you'll get better at reading the candlesticks and the charting. Um, so, learning candlesticks is very critical for day traders. We need to focus on technical analysis, fundamental analysis. Traders do not need to really care or worry about how to read the candlesticks. They're basically just really focused on just trading on any kind of news or fundamental analysis. Unlike technical analysis, really need to focus on candlesticks and charting. What is a candlestick? If you guys aren't familiar with this, if you are familiar with this, great. You already know about candlesticks. If you're not, make sure you just pay attention. It's truly the shape of the candle. So just like buying an actual candle in the store, you'll see that you basically have, this is what we call the wick, and that's the highest point reached, right? So each candle represents a time frame, right? So it basically tells you more information about the market. So obviously a green candle is a bullish sign, basically means it goes up, and a red candle is a bearish sign, which means it goes down. So, just like this chart right here, you could see that these are all red candles, right? So red candles means basically coming down, right? It shows that it's bearish. Green candle means it's going up. It's bullish. Okay. So again, we have the point it opened, the point it closed, and this right here, this is called the body, right? So always remember the big, thick, filled-in part is what we call the body. The body of the candle, and these like little thin lines below the candle, above the candle, we call that the wick. So again, guys, think of like an actual candle in your house. You got the body, you got the wicks, and within that time frame, it'll make more sense. Each candle represents a time frame, okay? So every candle is formed to represent a time frame. A candle could be represented in 1 minute, 5 minute, 15 minute, etc. They go on and on and on. 1 minute candlestick means that the candle represents 1 minute of time. 1 minute of time, what it traded at, right? What was that? So like, what was the price? So think of like an auction. Think of like you go to a car auction and they're only bidding on a car for 1 minute, right? So the guy's like, all right, we're gonna start the bid at $1,000. Do I have 1,100? Okay. Do I have 1,200? Do I have 1,300? No. Okay. Do I have 1,200? 1,100? Do I have 900? So as the guy's talking, right? That candle, there's like a candle. Imagine a candle forming. Okay, it went to like 1,000, went to 1,000, went to 1,200, went to 1,300. Okay, there's nobody up here that wants to buy, so the price comes back down. It basically shows you, the candle is basically like a meter, how high it went, how high it low, and what it actually is, if that makes sense. It's kind of hard to maybe picture that, but as a Forex trader, I focus mainly on the 15-minute chart, guys. And the reason I do that is because Forex trading it's slow money, but it's big money. You want to hold on to these for longer periods of time. And that's what I found out works the best for me, right? So again, Forex charts are a form of technical analysis. So with me, it's a lot easier for me to trade on a 15-minute chart. And this is just ultimately how I trade as a day trader in the Forex market. So more about candlesticks. We watch the candle forms while we are trading. Candles are also a form of base of support and resistance that we look for as far as a specific chart pattern. As traders, our main tools while trading is a chart. That is our bread and butter, especially with Forex trading, guys. So with Forex trading, it's just chart trading. That's it. You don't have to worry about anything else, right? We just need to master it. You can have some of the best news. Some of the best news out there, and the trade does the complete opposite. So for those that don't remember, Tesla had a recall of like 100,000 cars. Long story short, I bought a bunch of put options on this, looking for Tesla's stock price to crash that morning, and then she actually ripped up, rose, and I actually ended up losing a lot of money. It was very, very frustrating. Like that was like pretty. That was like one of like the last options trade I took for a long time because it was just very frustrating for the fact that there was bad news, but somehow this stock price still went up because of the manipulation behind it. Okay, so again, fundamental analysis only goes so far, but the rest is all technical analysis. Support, right? Support is a price that the trade cannot seem to go below. Two reasons for this, right? Lots of buyers with orders at this price and just sellers that are refusing to sell lower than this price. And here's a visual understanding of what a support is. So again, think of you're in your house, right? Say you're in your house. This is you take a basketball and you keep bouncing it, bouncing it, bouncing it on the floor. It's never going to break through your floor. We call that support. Right? That's called support, and there's multiple ways you could trade off of that by buying off those support levels, dip buying, and getting a nice push up. But there's an opposite of that, and that's called resistance, right? Resistance is a price that the trade cannot seem to go above, right? The two reasons for this: lots of sellers with orders at this price, or buyers that are refusing to buy higher at this price. So again, guys, visually think of yourself in your house right now. You're standing there. You got a basketball, right? This is you. You got three eyes apparently. This is a basketball, and you keep bouncing it, and it keeps hitting the ceiling. You bounce it, it hits the ceiling. You bounce it, you keep bouncing it, bouncing it, bouncing it, but it keeps hitting the ceiling. You just can't break through that ceiling. That's what we call resistance. Multiple ways to trade this. You could look to sell it, right? Sell it means you are looking to sell it and make money on the way down, right? That's another beautiful way we trade in the Forex market day in and day out. Now, all this support resistance is all textbook beginner information. If you don't know about it, get very, very familiar with it. Rewatch this multiple times. But if you are familiar with this, congratulations. You just got a refresher. There's extending triangle. Believe it or not, I didn't trade this with stocks or options, but with Forex trading, I do. Because again, with Forex trading, guys, I am watching the bigger time frame. I'm watching a 15-minute chart. So when I'm watching the 15-minute chart, I'm watching bigger time frames. I'm looking for bigger moves. Look at this beautiful push up, right? This is a nice, beautiful move up. This is not an extending triangle. This is a beautiful channel, is what we call this. But again, with Forex trading, again, it's more chart trading. There's more technical analysis behind it. There's more patterns. There's more setups. Okay, there is none of that with stocks because of manipulation. But with Forex trading, there is. So we have the famous ascending triangle that, believe it or not, I actually use a lot in the Forex market. It's very simple, guys. You have that resistance area, and you're having higher lows, higher lows, higher lows, looking for everything to tighten up and then to eventually break out of that channel, that area. And the next thing is a descending triangle. Descending the triangle is the exact same thing, but it's flipped, right? It's completely flipped, and you are having higher, lower highs, lower highs, lower highs, lower highs. It's descending down. At that point, you have the support area. You're looking for it to crash. You're looking for it to break that area and continue selling off. We also have flag patterns, right? A flag pattern, just like it looks, right, guys? We have this big, beautiful push up, and it forms a nice flag. At that point, we look for it to break out of that flag. We buy it, make our money on the way up. Next is a bear flag. So we had the bear flag or bull flag. This is now what we call the bear flag. Complete opposite, guys. Just flip that flag upside down. Same thing, comes down, pushes up, pushes up, pushes up, and then finally we look for it to break that flag and keep selling off. Next is going to be the triple bottom and double top. Triple bottom, very, very similar to like a support, guys, where she basically hit that bottom multiple times, right? We look for it to just keep holding, take a trade. Typically, guys, I like to take a trade here at the bottom. I always like to dip buy. Very rarely I like to chase it and buy at the top. I'd rather just be safe than sorry. And then same thing, double top, right? Double top, push up, which is also known as a resistance. We look to sell it, and make our money on the way down. So again, Forex trading, guys, is all chart trading, and we're going to see more live examples later on in this course. with MetaTrader 4 as well as my trading view, how I have everything set up. So again, I'm gonna show you guys, right? I'm gonna take the sheets off everything, show you guys how I have my trading view set up, my indicators, my MetaTrader 4, how I look at everything from a time frame standpoint, day in and day out. So with that being said, let's go on to the next part of this course.